because South Africa is expected to lose about $15 billion in tax revenue due to the impact of COVID-19. The government has lost more than $200 million in taxes as the sale of alcohol and cigarettes are still prohibited. Experts say other areas of tax revenue have also been lost, but authorities are resolute to revive the economy, but it is not without ramifications. Details of that in this report.
The tax authorities estimate the total annual revenue shortfall would be about $15 billion. On corporate taxes, there was a 55% decline in April, and VAT refunds were 12% lower. The authorities have already lost around $255 million in taxes as the sale of alcohol and cigarettes is still banned.
SARS collects those taxes essentially from the manufacturers at source. So in this current situation, obviously they've stopped producing because they've just been building up inventories at this point in time, or they're sitting on inventories at this stage. So by not producing, essentially SARS is foregoing those taxes at the very early stage.
The tax loss from cigarette and alcohol sales is water under the bridge.
It's difficult to imagine that smokers are suddenly going to be smoking more to make up, and the same goes with drinkers. It's unlikely that would ever be made up, and in fact, 99% of it will probably never be made up.
While those sin taxes are gone, there are other taxes that have also been lost.
There are other taxes that are forgone as part of that, and that includes the VAT and ultimately your corporate income tax, which then trickles down into dividends tax as well. So the tax impact is throughout the full extent of the taxes or tax types that we have as well. And that is a little bit more difficult to quantify.
There was a 19.7% decline in import taxes, with import VAT down 25% and customs duty down 11.8%. As the authorities attempt to get the economy kick-started again, there's still going to be a huge revenue shortfall, and that's not going to be made up anytime soon.